Where is the market headed? Are we in the middle of a correction? If a recession or a correction is going to occur, how long is it going to last? And how deep is it going to last? So all these questions will be answered in this video, friends. Hello and welcome to this video. My name is Aditya Mukherjee. I'm an educational content creator and an investment research analyst. And today our topic is, are we in the middle of a market correction? And if so, how long and how deep can it be? Now, based on the analysis of the different layers of the markets and their respective cyclicalities and phases, we think that this correction may go on till the first half of 2026 and the correction levels can be substantially deep. Now, why do I say so and what we mean when we are talking about the layers of the market? Let me try to bifurcate them and try to analyze them in this video. So a market cycle is not only the stock market cycle, friends. The stock market is only an expression or the extrovert part of the markets. There are deeper layers to it. There are multiple cycles to it. The core cycle is the monetary cycle or the currency cycle. Then lies the credit cycle or the lending cycle. Then lies the business cycle, which is comprised of capex cycle, supply and demand cycle, consumption cycle, etc., etc. And these together form the economic cycle. And on top of all these cycles lies the behavioral cycle, the behavior of the businesses and the individuals in terms of consumption and investment. And these together give us what we call the market cycle. And the response of the market cycle is seen in the stock market cycle. Stock market cycle is basically a reaction of whatever is happening at the different dimensions or the different layers of this entire market cycle. Now let me attend $1 million question. The question is, should you time the market? Now there are market investment advisors who are always preaching that you should always remain in the markets. You should never be out of the markets. It is perfectly right. You should always be in the markets, but you should know how to realign yourself with the market movements also. Now, to confirm this, I want to learn from the best and the best investor in the world, none other than Mr. Warren Buffett. In 2008, was he timing the market? Yes, he was. He had a huge cash pile. In 2000, was he timing the market? Yes, he was. In 1970s, was he timing the markets? Yes, he was. In 1980s, was he timing the markets? Yes, he was. In 1929, if he would have been there, I'm sure he would have still then timed the markets. And in 2025, right now, is he timing the markets? Yes, he is. He is having $350 billion of cash and cash equivalent assets loaded up. So that means he is damn sure timing the markets and he knows right times of investment are coming. He does not want to invest at the wrong side of the cycle. And you should also be able to time the markets well if you know how these cycles function together, how these market cycles function together. So let me get to them one by one. Let me start with the credit cycle. Banks expand their balance sheet or their asset count by lending. They lend to businesses, they lend to individuals, they lend to ideas, they lend to consumption. And in this way, they help the markets expand also. Now, after a long period of expansion, certain kind of froth stores up in those assets. For example, some ideas turn bad, some investments turn bad, some consumption turns bad, and loans start to underperform. And this results in banks realizing that they need to rationalize their balance sheets. And the regulatory authorities of the state also realizes that some rationalization is needed. Now this realization may be fueled by high rates of inflation also. And this is exactly what happened in the recent times when Federal Reserve was raising the rates. They did exactly what they needed to do because inflation could have spiraled out of control. Now what is the downside of it? The downside is when loans become difficult to get, capex can slow down, consumption can slow down, and as a result, for a certain period of time, the entire economic cycle may show signs of slowdown. And if you add geopolitical events to it, then all the more slowdown can happen. And this in a certain way is unfolding globally right now as we see in the stock markets. The tightening of the monetary system, the tightening of the credit cycles, geopolitical scenarios, certain geopolitical scenarios has in combined effect also impacted the business cycles. Now let me talk about the last cycle, which is the behavioral cycle. Now all these cycles together makes the markets behave in certain ways. And in behavior, there are two aspects. One is an objective logical aspect and the other is an emotional aspect. And this emotional aspect always overreacts. When times are good, individuals think it is going to be very good in the future. And when current times become very good, which they do become, then people start to think that things are going to be very, very good in the future. And when things become very, very good, then the markets tend to go into euphoria. And once euphoria sets in, that is, you see P's of 100, 200, 300, 500 and whatnot, and valuations become non-cash flow based, then the markets become very sensitive to any kind of small negative news also. Any geopolitical event, any credit related event, any business related news, all these things impact the market very deeply. And this is exactly what we are seeing unfold right now. And based on our analysis of different phases of the cycle and our own devised ways of understanding things, we think that till the first half of 2026, a downturn can continue. And during this time, there are certain assets, there are certain investments which can give you security, which can give you growth also. But that is part of another video. In this video, I'm just going to say, do invest in equity, but in a controlled way, in a very controlled way. Look at other domains of assets where investments can be made during times of recessions. And we'll talk about it in very much detail in one of our next videos. Right now, remain wise, remain alert, remain vigilant to all these cycles and the news that is coming around, and invest very, very wisely and in a cautious manner. The correction may go on, I repeat, the correction may go on till the first half of 2026. And what should you do and where should you invest? We will come across these topics in the next videos. Thank you for being with me in this video. See you in the next one.